Hey guys, good afternoon and welcome to the CNBC-TV18 Mumbai newsroom. I'm Pavitra, with me is Ekta as always, and we're in our festive spirit. We wish all of you a very, very happy and profitable Dhanteras, Diwali and a new year. And Ekta, the market has slipped a little bit in the past few minutes, but there has been a good recovery from the lows of the day. So if you look at the Nifty from the lows of the day, we're up around 60 points. The mid-cap index is up around 300 points. So we are seeing a little bit of green. And I guess today's a good day to be discussing some new money-making ideas for the new year.
Hi, Pavitra. Yes, absolutely. Net is just a day of consolidation in today's trading session. It seems as though the market is in wait and watch at this point in time, just about biding time and, waiting and seeing what the cues from the global space would be, how exactly Brent crude moves. And it is interesting that while we are talking about a consolidatory day for the equities, we have the rupee, which has hit a record low, despite Brent crude seeing a pull back to levels of around $79 to $80 per barrel. So that is something that we should watch out for. But nonetheless, we have a lot of stocks in focus on account of picks from our guests this afternoon. So it is a special Your Stock segment that we have for you. Joining us this afternoon, we have Deepak Jasani, who is the head retail research at HDFC Securities. Deepak, hi, welcome to the show and season's greetings to you as well.
Good afternoon.
Afternoon. Well, let's kick off the show by talking about one of your first picks, which is from the pharmaceutical space. You're looking at Dr. Reddy's, which is a frontline stock. You're bullish on that one.
Right. So first of all, season's greetings to all of you, including the viewers. And may this Diwali bring all of you a lot of happiness and wealth. Now, coming to Dr. Reddy's, it is the first pick that we have. I think pharma as a sector has sort of, after underperforming over the last couple of years due to various headwinds, now it seems to be turning around. The company is a leading pharmaceutical company with presence across domestic formulations, APIs, biosimilars, etc. So in that sense, we are expecting US business to grow by about 11% CAGR over the next 2 years. And operating margin could be around 26.5% to 27.5%. Net profit could grow by about 16.5% CAGR. So those are some reasons. There are some concern areas, but I think the triggers will be much more than the concerns at this point of time.
Okay, that is on Dr. Reddy's. Another one which really stands out to me, Deepak, hi, thanks for joining us. This is Pavitra, is, Equitas Small Finance Bank. Now, this is a stock which has already run up a lot, right? If I pull up a one-year kind of chart, it's up around 85%. If you get in now, what is the kind of upside that you see on this stock?
Yeah, so you're right. Equitas, a lot of small finance banks have done well over the last year, and Equitas is one of them. We had issued a report earlier also on the same. We have a target on Equitas at about 115 rupees, and is one of the largest small finance banks in India, and there is still some scope for getting re-rated. The earnings are expected to grow at a decent pace, and the asset quality also could remain protected.
Okay, all right. You expect the asset quality to be protected for Equitas SFB, but you're also looking at a different sector, which is Godrej Industries. You're expecting maybe some amount of pressure, however, in the standalone business in the near term?
Right. Here, I think the bet is on restructuring. The family is undergoing a split. So here, our expectation is that this Godrej Industry being a holding company, holding big stakes in Godrej Properties, Godrej Consumers, and some in unlisted companies. Now, this shareholders could ultimately benefit out of the arrangement of split. Currently, it is suffering from holding company discount. Our expectation is that once the split is formalized, in some way or the other, the stock price of Godrej Industry itself will rise, or you will get additional shares, which will lead to an overall increase in valuation.
Okay, and how long do you expect this pressure to stay? You were mentioning that we could see some near-term pressure. How long do you think that will stretch?
Yeah, the chemical sector as it is undergoing some pressure. I think a lot of people expect that Q2 could be the last bad quarter for the chemical sector as a whole. And from Q3, we could see some improvement in uh, the realizations and the spreads. We think from maybe middle of Q3, the chemical sector, the business in the standalone Godrej industry could start doing well.
Okay, fine, got that. Another one which I was looking at, which you mentioned, is Gujarat Alkalis. Now, we have been talking about the rise in caustic soda prices as well as energy costs, but take us through what is your call on this from, say, a one-year kind of perspective. How do you look at this, and what is the kind of target that you have on this play as well?
So again, here I think the company reported not so encouraging numbers for Q2, I think yesterday or day before. Going by the same logic that chemical sector generally has not been doing well so far. Here also we expect that the chloralkali spreads will improve going forward. The company is also undergoing certain expansion and has the JV with Nalco will also start getting commissioned. So it will benefit out of volume as well as improving spreads. So that is the bet we are having on the company.
Okay, all right. That is a whole host of stocks that you've given us as a Diwali present, all of our retail investors and our viewers as a Diwali present. Thanks very much for joining in and taking us through all of those stocks. Well, we need to take a break, but just watch out for Honasa because it's really had a roller coaster session in today's trading session because it did recover after what was a steep fall post-market opening, but only to see a decline now. So Honasa is the one that I'm talking about. That stock is now down around 1.5% already. There was a positive note, brokerage note that came out on it, but it hasn't enthused too much sentiment. That stock down around 1.7%. We'll take a short break, but up next we'll get chatting with Amnish Aggarwal of Prabhudas Lilladher, who's going to join in with his stock bets this Diwali. Welcome back. You're still tuned into this Diwali special of Your Stocks, where we are getting your whole host of picks from experts this afternoon. But just a quick word before we get to our guest. We don't have the entire market which is consolidating at this point in time, but it is important to point out that within the Nifty stocks, there are some amount of declines and some amount of stock moves which are taking place. So case in point would be M&M. That stock is down around 1.8% post its Q2 numbers. So that stock is a bit pressured at this point in time. There is concerns about the company losing a share in the SUV space. So that stock is probably pressured post numbers. We do have Apollo Hospitals also, which is down around 1% post numbers. So that stock is under pressure. They did come out with numbers post markets yesterday. And a lot of the other auto stocks have also been dragged post M&M. So Hero MotoCorp, for example, is the top loser on the Nifty this afternoon. That stock is down around 2% at this point in time. Some amount of tremors coming in for the likes of HCL Tech, Titan, Dr. Reddy's, Wipro. All of these stocks seeing a little bit of red this afternoon. Well, we do have a lot more lined up.
All right, and we are still getting our viewers all of the new picks that they can look at in the coming year as well. So let me welcome our next guest on the show. We have Amnish Aggarwal joining us. He's head of research at Prabhudas Lilladher and joins us to take us through some fresh ideas. Amnish, thanks a lot for joining us, and season's greetings to you, your entire team, and a very happy Diwali as well. We did go through that entire set of stocks that you put out in terms of what you could look at for the new Samvat. So I want to start with a recent listing, which is RR Cable. Just take us through what you expect, because, this stock, it listed well, of course. Even after that, it's put on quite a bit. In the last 5 days or so, it's up around 15%. What is the potential that you see here? It's also in that hot cable space, right?
Yeah, first of all, a very, you can say, happy Diwali and season greetings to all the viewers and the CNBC family. Now, coming to RR cables, you see, as you refer to, first of all, the entire this year wires and cable space is doing very well. And all these stocks, they have got re-rated over the, say, last 12 months or so, given the superior growth which they are getting both from the industrial side as well as from the residential or the B2C space. Now, if you look at RR cable has got the maximum contribution from the B2C segments or the consumer segment as far as the wire and cable companies in the listed space are concerned. In addition to it, it is also slowly inching up its, you can say, presence in the consumer durable space, which although is I would say very limited, it is losing money as of now. So RR cable has got a lot of potential both in terms of margin expansion as well as top line growth. Yes, the stock got very good reception, and after listing it has got re-rated, but we still believe that it could give you 20 to 25% return from here over the next 12 to 15 months.
Okay, 20 to 25% returns in the next 12 to 15 odd months for RR cable. Amnish, one of the picks that you have from the large cap space is Maruti, and there is this discussion underway about how Maruti is becoming much stronger when it comes to the SUV segment and probably eating share from companies such as M&M as well. What are your thoughts within the two and Maruti? Is that one of the reasons that you probably like it?
Yeah, I think that is one of the major reasons, because the problem which Maruti was having earlier is that it had lost share primarily because of the weak presence in the SUV segment, where the market is actually moving towards. And secondly, the entry-level segment of, say, your Altos or Wagon-R. Wagon-R is still doing better, but Alto and all, they were not doing well. Now, having, you can say, started regaining market share in the SUV segment, where the entire focus of your PV space lies, that puts Maruti in a very, very solid position. Secondly, the recent, you can say, transaction with the parent company, whereby it will be getting the manufacturing facility in Gujarat. So I think that is also positive. So given that these two factors, I think Maruti remains a very formidable space in the your PV space.
Okay, that is Maruti, target of 12,485. The next one I want to talk to you about is from the real estate space, because that entire pocket has been seeing pretty sharp moves as well. You're choosing Sunteck Realty from this space. So tell me, why does this stand out to you from the entire basket?
You see, Sunteck is, I would say, first of all, the valuations are relatively cheaper if you look at other real estate stocks. It has got a project in BKC where it has got a lot of, you can say, unsold inventory, where the project is ready. I would say that a few hundred crores of at least inventory is still there, which they can sell, and everything is going to flow to the bottom line in that. So in addition to it, I think they are having a few projects and a few land banks which are good. And given the fact that the valuations are attractive, I think Sunteck Realty is a good, you can say, real estate pick in the mid-cap space.
And what is the kind of target that you expect on this one, on Sunteck?
You see, we have a target of 565, which gives you an upside of nearly, say, it's more than 20%. So I think if the entire story plays out and as the inventory, particularly in the BKC project, that continues to come down and they are able to sell it, the balance sheet will strengthen and the stock can even see, you can say, it can even surpass a target price, maybe over the next 12 to 15 months.
Okay. Safari Industries is a stock that you like. There's been so much which is spoken about the story and even the promoter. But what is it about Safari that you like? What is the upside that you envisage and the time frame?
You see, Safari has got massively re-rated over the last 12 months. And the reason being that the entire business model has undergone a sea change. Because there are, you can say, three major players in the entire your luggage space: Samsonite, Safari, and VIP Industries. And Safari earlier was associated more with the entry level and the lower end of the products. But by virtue of its quality, by virtue of, you can say, its repositioning, it is now slowly inching up, and now it is trying to get into the more, you can say, more premium, you can say, or rather I would say the mid to mid premium sort of a segment. So as you move up, the realizations will move up. In fact, they have posted one of the best margins they have done ever. And in addition to it, the kind of expansion plans which they have got, and given the fact that the largest, you can say, market share company, VIP, is under some sort of a pressure, they are not able to hold on to their, you can say, market share and all. So that gives Safari a lot of elbow room to gain market share in the near to medium term. So the stock has got re-rated, but I think if the company continues to perform the way it is performing, there's still a potential for, say, another 15-20% upside. But one will have to be slightly more patient given the kind of run-up we have seen in the last 3 to 6 months.
Okay, so even after the run-up, we can see more over here as well. That is good to hear. Amnish, just one final question. You have a buy call on Z Entertainment as well. Now, take us through what you expect on this one, because, you know, today as well, the stock is down around 6%. The results were good. The problem is that there is some kind of worry over the merger progress with Sony. How are you looking at this? And, you know, how would you look at this with a one-year kind of time frame?
You see, the entire broadcasting space is undergoing a sea change because the market slowly and slowly is shifting towards OTT. Now, Z has been one of the leaders in this entire broadcasting space, but a lot depends upon how the merger with Sony pans out. So I would say this is a big call, first of all, on the merger happening, because once the merger happens, the balance sheet of the company will become very stronger. And with the Sony management then in place, I think a lot will change as far as Z Entertainment is concerned. And secondly, I think the sector, entire broadcasting space has got derated over a period of time. But if you have observed over the past few months, now even the OTT space has started getting the advertising revenue. So I think as far as performance is concerned, I think the broadcasting space should bottom out, say, in the next 3 to 6 months. And then afterwards, if particularly the advertising from the consumer companies that picks up, plus your OTT also catches up, and in case of the merger then consummates, then this stock can give you actually very good returns over the next 6 months or so.
Okay, all right, Amnish, we're going to leave it on that note. Wish you a happy Diwali as well. Thanks very much for joining in and sharing all of your picks with us. Thanks very much, and season's greetings. Well, that's all the time that we have on the show, but do remember to email us all of your queries and we will, as always, address them with our experts. Stay tuned. Closing bell will take you through the last hour of trade.